Welcome back. Hope you're having a good morning. Well, crude prices are lower this morning as concerns over possible softening of U.S. demand and broad oversupply offset threats to output from the conflict in West Asia as well as in Ukraine. Richard Redoglia, the CEO at Matrix Global, joins us on the show. Hi, Richard. Good morning. Good to see you win. Well, unfortunately, some of the geopolitical issues have crept up yet again. But clearly, demand is rather soft, and there is an imbalance between demand as well as supply, given that crude oil prices, they can't get above that $68, $70 per barrel mark. How are you seeing crude oil moving from here on?
Thank you for having me today. I don't think it's going anywhere. I think I've been on your show now for the last, I think, since the Iran-Iraq affair, right? And we saw the spike in prices there. And what that spike showed us is a market that was structurally short, that the market, that the traders, that the money in the market had was structurally short. Those two events in Iran caused the market to cover those shorts, and that's why the spike came from, right? So our visit above $70, I look at WTI more than I look at Brent, I'm here in the States. Those spikes to $75, $78 were a function of shorts covering. Once the market looked at what was going on and realized that nothing was going on in Iran, that what we would see is the oversupply of the market come back in. And two things have happened. One is the market is balanced. And so the risk, or consider the war risk, has declined by a couple dollars. So that's out of the market. But equally as important is OPEC. OPEC has had a schedule for the last 4 years where they pulled barrels off the market between 1 and 4 million barrels. And they said, we're going to do this in an orderly fashion, and we're going to do it over time. And that's what supported the market effectively above $70 for the last 3 to 4 years. They're no longer doing that. Simultaneously to that, we're seeing a significant production coming offshore South America, both in Brazil and Guyana. And so there we have the effect there. As it relates to demand in the United States is not a problem. Demand is going to be what it's going to be, and the U.S. economy is going to be fine. It's more how one views demand in China, which is going to be flat, and more importantly, what it's going to be in India.
Yeah, and demand even, I guess, in India has been pretty steady. But Richard, then there is the Russia question as well, right? And no one knows, and we don't know if EU is going to bite the bullet, if the US is going to move first. What happens if Russian oil or oil assets get sanctioned? Does that lead to some sort of an immediate shock? It's a hypothetical question right now. I just want to know.
No, that is an excellent question. That is really the question we should be talking about right now. So China imports 2.2 million barrels of Russian oil. India's produced about 1.4 million barrels of Russian oil. I think the Trump policy is a bad policy. I think what he's doing, I think Trump, most of his policies are good. I think this is a bad one to threaten to put 100% tariffs on India and China because they're importing Russian oil. Both those countries, India in particular, can use Russian oil at a discount. If it's getting into a discount, it's better for the Indian people. I'm sorry, the question is going to be politically. Is there a balance? China will not go by any type of sanctions. But let's see the example. Let's say India and China do. The market would spike significantly because that's about 3 million barrels that would have to find a home somewhere else. And it would also put a significant discount on Russian oil. So it's a question. I don't think that you are sitting in India, so you tell me. I believe that Modi will continue to buy oil. They might buy a little less. I think Reliance and maybe some of the private companies might buy a little less. But I imagine IOC and the other state-owned oil companies will continue to buy Russian oil.
No, absolutely. They have to now. And that's been the stated stance here, that really no one can tell us what to buy from where, and we need to do what is economically right for the people here. But just
100% agree. That's exact policy.
But just to go back to that point, in case, because now President Trump has lobbed the ball in the European Union's court, right, saying that you have to impose tariffs. But in case there are any sanctions on Russian oil, what happens to, say, Brent? Will it be a 3, 4, 5% impact? What happens?
Well, if the only way that can happen, so the only thing that's going to happen is, does India not buy Russian oil? That's the only. There's only two outcomes here. Does China not buy it, or does India not buy it? And if the answer is neither of them, both continue to buy it, then nothing's happened to price. The question becomes, what happens from an economic perspective and the pressure that will come if the EU decides to do these 100% tariffs. I'd be surprised. I have no idea. I'd be surprised if the EU agrees to opposing those tariffs. Now, theoretically or morally, they should, because they are so against Putin and Russia. So really what they should do is kind of put their money where their mouth is. If Trump's going to do it, the EU should do it. Will they? I do not know. And that's another can of worms that we would be very difficult to get back into.
So, okay, talking in terms of price ranges, you said you look at NYMEX more closely, which has been, well behaved around 61, 62. As we look at the next couple of months going into the end of the year, what would be a range that you'd keep in mind?
I've been saying for the past few months, I think prices are falling. So the $62 price you're looking at right now on the screen, or $63.10 or whatever it may be, $62. That's the lowest price since June, right? So we are bumping up against what could considered to be. If you had a price chart, if you put a price chart up, you would see that we're in a very vulnerable area. If this WTI market or Brent falls another $1.50 or so, it's breaking out to prices the market had not seen all the way back towards the middle of the year, or excuse me, the beginning of the year. And so I'm thinking down. I don't think China or Russia are going to do anything. And but there goes makes the market. So if they do something, the market will move up a little bit. But even if it moves up, I think every rally will get sold. It'll just be a matter of time before those barrels re-enter the market, because there's going to be no home for them to go to.
Okay, all right, got it. So you don't see a big spike up happening,
right?
Which is good
at
news
all.
Which is good news for consumers like us and importers like us.
Can I make one point? Can I make one point?
Yes, sure.
Can you see me behind my head?
Yes.
Right there. 24 years ago, that's where I was. I was at the base. See the two towers there below the World Financial Center?
Yes.
That's where we were 24 years. I was not there. My office is there. I worked there for 20 years, and my office is in that tower, looking at those two towers 24 years ago. So let's say, take a moment of, it's 9/11 in the United States.
Absolutely. It is a day that the world and definitely the U.S. is never going to forget. And we just hope that nothing of that sort is repeated on humanity ever again. Thank you so much, Richard, for joining us today.